Let's talk to Ronnie Chopra. He is the Chief Global Strategist at Horizon Stockbrokers. Very good morning to you, young
Good morning.
Ronnie. Right, the art of contrarian thinking, I always think is your middle name. Let's kick off. We've got three markets to review. The first one, Barclays Bank PLC. You've been on the show before saying that you should consider having these in the portfolio. Is that still the case?
Yeah, very much so. Barclays have underperformed the UK banking sector somewhat over the last 12 months or so, but I think their last set of results are very good. And I think that they're probably the pick of the sector at the moment in terms of valuation. When Jeff Steele announced results a few weeks ago, he said that they've got off to a much better start, 2018.
Yep.
We've also got the upcoming rate hikes in the US. When interest rate rises in the economy, it's very beneficial for banks.
Yep.
And Barclays should be a major beneficiary of this. The shares have languished for some time. They're a global brand name. They also benefit from their overseas operations, especially in the US. So with a relatively weak pound, which we're going to talk about as well later, I think Barclays offer a lot of value at the moment. They've increased their dividend. For next year, we're talking about a 4 to 5% dividend yield, which is nothing to be sneezed at. But after last year's Annus Horribilis, which the Queen liked to talk about, I think this year it should be a good one for Barclays. Obviously, the volatility in the market, as long as their trading is going well, they should be making decent money from there as well. But just going back even 10, 15 years, these used to be trading at £6, £7 a share back in the early 2000s, 2003, 2004, when they were touted as a bid target for the likes of Bank of America and Citigroup. I mean, now their market cap is a quarter of what it was then.
Yeah.
And, we're talking about 10, 12 years on, and, these shares obviously have suffered somewhat. They've lagged the UK FTSE benchmark. And I think the financial stocks generally, after a period of underperformance, they're due some outperformance. So yes, Barclays is a good little buy.
Okay, so they're on our list. Let's move on to something that's probably a little bit more tricky to call. Cable, the Great British Pound against US dollar. And late in Q4, lots of technical analysts came on and said that this was basically going to parity. And you put your hand up and said, no, it's not. It's going to go to 140. And near as damn it, we got up to 138.50, I think. What are your latest thoughts on this?
I picked that one right. But at the moment, I think we're struggling to go much higher than 140. We've kind of, since January, we've had difficulty going. I think the peak was something like 142 or 143. At the moment, we're languishing just below 140. I think last time I looked, it was 139.50. And I don't see it rallying that much further from 140 at the moment.
Right.
Next week, we're going to probably, I think it's 95% surety that we're going to get a rate hike in the US. So that should boost the US dollar and weaken the pound. Also, US economic data has been very good recently, with the non-farm payrolls much better than expected, low inflation. So again, that puts a lot of upward pressure on the US dollar. And after last year's 20% rally in the pound against the dollar, I think we're going to struggle a little bit. But having said that, a lot for us depends on Brexit, the Brexit negotiations. How well the negotiations go between now and whatever the next 12 months or so is going to obviously impact sterling. As an economy, the UK is doing fairly well. But yes, we still have that cloud over us regarding Brexit. So yeah, 140, I don't see it going much higher than, maybe we might go to 142, 143 again.
But you think we're close to a top?
I think and that's been the case for the last couple of months. We're struggling, aren't we?
Yep. Okay, so let's wrap up then with another tricky stock, ITV, a favourite, I think, in people's portfolios for the last year or two, expecting some takeover merger activity. And here we are up on the lows.
I know.
And the new management.
That's right. But I think why I like this at the moment is also because of the bid for Sky. The increased offer for Sky obviously highlights value in ITV.
Yeah.
So with or without a bid for ITV, these are languishing at pretty much a multi-year low at the moment. And they're hovering around the 150p mark. They're on a price-earnings ratio of just under 10 on this year's earnings. Dividend yield in excess of 5%. And so with or without a bid, fundamentals are pretty good. The one thing that kind of casts a shadow is the reduced expenditure on advertising.
Yeah.
So they get hit there. But with the World Cup in the next few months, that should give a boost to the likes of ITV because they're going to increase their revenues during the World Cup, the Football World Cup. And that should provide a bit of impetus for the share price. Throw in the John Malone from Liberty Media saying that he would seriously consider acquiring ITV at the right price. You know, you're getting that bid talk in for nothing. So again, a low price earnings ratio of 10, dividend yield in excess of 5%. Fundamentals are good. X Factor, obviously, you know, they get their viewers. ITV, one of the terrestrial TV channels. I find it quite baffling that they are languishing at this level, especially also after the increased bid offer for Sky. So again, you know, these offer value.
Another stock to sort of tuck away.
Yeah, well, it's again a contrarian view, but I mean, like you're getting the 5-6% dividend yield. Share prices at a multi-year low. Throw in the bid talk. You know, if there's a bid, these will go to 250.
Yeah.
But yeah, I don't see much downside. And even, you know, we're seeing volatile equity markets. You know, pretty much every day the Dow is on a 300-400 point swing. So that kind of nervousness surrounding the stock market means that also this has its defensive qualities. Because it's backed by very strong fundamentals, it shouldn't fall that much more, even if the Dow was to lose 10-20%.
Okay, just to wrap up, I've read a Bank of America report, or saw the headlines recently. They said that the UK equity market was the most hated global indices markets on the planet.
I disagree completely.
So,
you know, because on fundamentals, and I've said this before, this one, the Spanish equity market, these are on much lower price-earnings ratios. So the valuations are extremely attractive. And if the pound weakens a little bit, that makes the UK market even more attractive because of its predominantly export-oriented FTSE 100, which benefits from a weak pound.
Yep.
So whoever wrote that Bank of America article, I disagree completely, especially when in the UK, in the FTSE 100, we have so many multinational companies that are comparable with the large US companies, you know, the big tobacco companies, British American Tobacco, British Petroleum, Shell, the banks, Barclays, we mentioned HSBC, Glaxo, you know, we're leaders in all these sectors. So disagree completely.
On that note, Ronnie?
Contrarian.
Yeah, lovely. Thank you very much, Lee, for your time.
Thank you.